Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. I've said repeatedly in this commentary for weeks, months even, that the most significant feature of this market has been and still is even now the very significant lows of 2021 of 15,665, which led to lows of late November 2023 plus the lows in 2024 in January, February, and with some mild finessing the lows of late July and early September down in the 15,840 and 15,600 zone, and most recently late October, November and early December last year. I suppose also the congestion in January, February this year. It is at this point that I feel obliged once again to mention the big descending scallop pattern I've been going on about for months and months and months, and what it may mean within the near-term universe. So the key level has been is the lows at 15,840. A significant move below this, and by that you mean you wouldn't know it when you see it, a significant break below this would give a downside potential for the descending scallop pattern down in the 13,830 zone. It still all comes down to what the market has done and whether it finished fondling that key 15,840 zone. As of last week, well, it looked like we might well have done. As I said last week, and I quote, it would depend if the recent highs in the 16,200 area overhead would hold the latest move higher, end of quote. Well, last week and now this week so far have shown that prices have not been held down, as the market pushed higher and most interestingly over and seemingly stabilizing over the gold long moving average currently at 16,355, as well as the dark blue neckline currently at 15,910, the late July to late November 2024 head and shoulders top pattern. Last week my thoughts on this market were mixed and somewhat unclear, and I quote, right now I'm not convinced as to whether the market will exceed the 16,200 area overhead or drop back down to the 15,000 zone below, end of quote. Well, this week they are perhaps starting to become clearer, enough that I'm now starting to contemplate whether the very large descending scallop pattern, whether it might see a move higher rather than lower. If this becomes the case, then we should look towards, well, the highs in early October between July 2022 low at 18,265 and what is now the 50% Fibonacci line of the May 24 to January 25 move at 18,330. This may be quite an ask of this market, but that is one alternative. Another alternative, one that has presented itself more recently and is consequently smaller, is to regard the mid-December to late February action as a possible double bottom, even Adam time, though admittedly not a very pretty one. In this case, with the break higher over the bright red neckline, currently at 15,925, we would have a primary target X up in the 16,825 area, not too far from where we are now, and the harder to achieve secondary target X1 up in the 17,170 zone. LME 3-month zinc. Much like LME copper and LME aluminium, there are a number of patterns here that have affected this market in recent times. The first is the broken and breached but still refusing to die old dark blue upper time above, currently at 29.32. And the middle time below, currently at 27.67, the May to August 2023 bullish shift pitch walk that subsequently acted as an August 23 to April 24 upper bull channel line. This one will not die. As recently as in January through to today, the market is playing between the broken upper blue upper time and broken dark blue middle time. We're in between these two broken tines right now. Then there is the purple lower time, currently 28.79, of the somewhat newer February to August 2024 bullish shift pitch walk. Prices have been on the verge of pushing once more below this pitch walk, but for some reason it will still not let go of them. So watch this carefully, at least for the next few weeks. In the meantime, whilst all these big picture patterns sort themselves out, we had the overhead declining green short medium moving average, currently at 28.69, push itself down below the market, and perhaps the more important gold long moving average, currently at 29.15, cap the recent market, along with a small congestion band between 29.05 to 29.17. We also now have the medium moving average a little higher up, currently at 29.52, now entering the frame, dipping below congestion between 29.58 to 29.67. Contains the interesting big old 50% Fibonacci line, a 2008 to 2022 move at 29.67. As you can see, there's a lot of stuff fairly close to the market, and I'm even starting to wonder if I should look at the whole dark blue middle time below up to the big old 50% Fibonacci line overhead as a super large congestion zone. I will ponder on this idea some more. LME 3-month Ting. Like in some other metals I've discussed, there are a number of patterns here affecting this market. The first is the bright red neckline, currently at 32,905 of the uneven August to November 2024 head and shoulders top. This bright red neckline had previously been closely aligned with the gold long moving average, currently at 31,240. But in November last year they parted ways, and the gold long moving average had most recently acted as support, especially 2 weeks ago in turning prices higher, along with another pattern which I will shortly discuss. The next is the flatlining gold long moving average itself. This had capped prices in early February, and conversely last week and the week before acted as support and halted the decline, along with another pattern which I will once again shortly discuss, forming a pipe bottom, the results of which we have seen last week and this week as well. Okay, so it's about time I discuss this other pattern that I had mentioned earlier, twice. Made up from the green upper trend line, currently at 31,055, and the bright green lower trend line of the November 24 to February 25, making an ascending triangle that could very well be seen as an ascending wedge pattern, but both with the same move. The bright green lower trend line is very associated with the dark blue lower trend line, currently at 3670, of the large November 23 to November 2024 bullish shift pitch hawk, enough that you might consider either of these, the bright green or the dark blue, as the lower trend line. 5 weeks ago I detailed the basic constructions of this pattern, and then 4 weeks ago the move up over the green upper trend line, and especially the gold long moving average, I placed the primary target in what was then topside in the 33,150 area, and a secondary hardest to reach target X1 up in the 34,500 area. 3 weeks ago prices reached the primary target and stretched up, trying to reach the secondary target X1. However, the market did not manage it back then, before dropping back down all the way to the comfort of the gold long moving average and the broken green upper trend line. However, the market early last week formed that pipe bottom on the top of the green upper trend line, and we are seeing prices today moving up through the old primary target and towards target X1. And there's the rub, as we're also testing once again the overhead bright red neckline. But it's not the only obstacle in the way. It's not the only obstacle in the way. As further up we have the April 2011 and previous all-time high at 33,605, as well as the 50% Fibonacci, the March to October 22 move at 34,175, that helped cap prices as recently as late September to early October 2024. However, there would be a certain symmetry to a move higher. Could even look at the early February today action as part of a potential bullish half hesitation, but let's not get ahead of ourselves here. There is still a lot of work needed on the upside to further justify such thoughts. In the meantime, I've drawn a pink early February to early March bullish Andrews pitchfork to capture the bullish angle of attack. We're right now in between the overhead middle time, currently at 33,870, and the lower time below, currently at 31,990. I would of course finesse this pattern to a shallow bullish shift pitch hawk should the circumstances demand it.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.